Hello. GameStop earnings stock is absolutely cratering here in after hours from a high of 15.95. Stocks buddy triggered bearish and it tanked to $12. So unreal move down, huge money to be made. That's at least 10% on the squeezy little scalp. Volume outflows were huge. So I think anybody holding this with an optimistic eye for upside should be very concerned given the volume that's flowed through here since the last, I don't know, 15, 20 minutes. So sorry, I'm just filling in for Lee. He had a little bit of an emergency. So I'm trying to get filled in. I don't know if they reported yet. We got to go. We got to go look right now. Right now. So it looks like net sales were 1.794 billion for the fourth quarter compared to 2.26 billion. So some negative growth there. Expenses were 20% of net sales, so they remained about the same. Sell problem sales down, but expenses didn't decrease with it. Net income 63 million for the fourth quarter compared to 48 million from the prior year's fourth quarter. So there's a nice nearly 50% growth there. Cash equivalents 1.19 billion. What in the hell? So they're holding at least a bill in stock and cash. Long-term debt remains limited. Low interest, unsecured loan term with the French government's response COVID-19. That makes sense. But no, it doesn't make sense at all. So total net sales 5.27 billion for fiscal 23 compared to 597. So about 700 million in growth for, oh no, that was 2022. So this year, so 700 million decline. Adjusted EBITDA 64.7 million compared to 192. So I want to say they went from negative to positive. I don't know how this is going to fare for the stock from here. Looking at this, let's get a better understanding of the levels right now. Let's get this indicator off here for a minute. Let's find a base here. So that's where we're trading right now. Are we going to hold there? I'd say 13 was the hold you'd want to see. So above 13, this could get interesting, but below 13, it could be even more interesting. There might be a trade even further to the downside to just south of $12. So let's watch this tight little range here because I think that GameStop's going to, let me put this chart bigger. My bad. Oh, right. So who's holding GameStop here? I see we got like almost 100 people here. Come on, some of you got to be holding it. Come on. Who's still holding this stock? Drop it in the comments. I know a lot of you are probably from Twitter, so we're not going to hear much from you, even though I would love to because I love you guys. And I appreciate the Twitter love. I just want to say that. Haven't been a big Twitter guy, but you guys have been awesome. I appreciate you guys coming to all these streams, checking it out, and hanging out. I mean, it's pretty fantastic in my opinion. You guys are the tits. So for those of you on Twitter, if you want to pop to the original post, I'd love to hear your guys' thoughts. If anybody's holding GameStop, the original post is live from 4 minutes ago. We went live. I would love to see who's holding and who's not, just to get an idea of what is their retail investor base look like now? Because I think that's the thing with this is that nobody's really thinking about, talking about, focused on the reality that this wasn't necessarily just a COVID play, but where do we go from here? Because we have to build longevity. That's the key thing for a stock like this. I mean, you look at that chart, and for those of you that haven't followed us before, like we bought GameStop at about $5.50. We rode it to 400 plus, and I cashed out and held a couple shares. It doesn't show that on the weekly. You have to go to like the 4 hour to really see the height of the run there. What the hell? Did they perform a split or something? Is this like non-split adjusted price? What is this? Because it ran 500 plus. So what is this? Why is it only showing me this? Oh my God, TradingView, forget you, man. Come on. Let's go back to the live chart here. We'll worry about that later. But the secondary follow-up question is, what are we going to see? Let's pull the AMC chart up quickly. And now, be very clear, in my opinion, these are very different companies, guys. Like, I would have a much stronger degree of confidence from a consumer sentiment perspective with GameStop than I ever would with AMC. AMC is very good to us. We made a lot of money. Rode this one from $2 to about $69, $70. Cashed out. That was a phenomenal payday. Couldn't ask for more. Couldn't want more. But yeah, I think that right now we really just need to see who's going to come in and buy here, because I really don't. Without seeing that earnings growth, I don't think consumer sentiment is going to be all that great. And I guess we can go and let's go to that. Let's do that. Let's do that. Our Disney calls are booming right now. Sorry, it's a quick side note. Almost 300% on these boys. Whew! If you don't come to the Monday stream, Mondays, 5 p.m. Eastern, right here on Twitter and YouTube, check it out. That was a trade that we locked in there. Disney had an exceptional day. Our Tesla trade is also very green. We were buying at 160, and it's currently at 177. So I'm very excited for that. Now let's take a look. Let's go to the NASDAQ's terrible website and look at what the expectations are as far as GameStop's earnings going forward. So the NASDAQ, if anyone's from the NASDAQ and you're listening, I have a web design company. I'll happily rebuild your website. It's absolutely terrible. Load speed, it's just crazy. I'm sure it's the data import, but whatever. Let's go to earnings. So now this is where it's going to get interesting. The trade on GameStop was not for the earnings we just experienced. Wait, did we just report? No, we just reported. We did not report yet for Q1. Isn't that what we just? Oh, that was fourth quarter and fiscal. So if you look at this chart here, right? Expected negative earnings for the last four. For the first time, we're expecting positive earnings for Q1 of 24, which I'm assuming has to be soon. I have to go to stock. I just trust StockTwits for the earnings stuff. They're all over it. Okay, so when do we have? Does anybody know? When do we have? What are the expectations for the Q1 2024 earnings? So their fiscal quarter ended Jan 24, so that means we're going to get that in April. So that's really where we. Oh wow, this is awesome. So I guess the comments on Twitter do show up on my StreamYard. So yeah, guys, drop comments on that post. That's phenomenal. I did not know it did that. So if you comment on the live stream itself, I can actually see those, which is awesome. That's really cool. Let me go to that because I could see highest number you expect GME. So, I mean, going back to the chart here, here's the deal. If GameStop stays below $13, you can expect it to come down to 12 because it loves trading in these ranges. GameStop really, really loves it. So we go to the hourly chart here. We can see that pretty much every time we've stayed below 13. Obviously, we came down to 12 and then picked back up. When we go below 13, we have a higher likelihood of heading down to 1192, which is a pretty solid support. than we do of kicking back up and turning back up above 13. So if we look at this, let's go to the 4 hour. So we can see that this range also held true right here. When it broke up over 1190, it ripped to 13 plus and exploded. When it came back down below 13, it kept finding the bottom at 1190, and then did it again, went even lower to 10, and then ripped through this range again. The strategy I use is just simple range trading strategy. I find these ranges that the price tends to trade between very simply. It just always, if it breaks below, it goes to the bottom of the range. Guys, you can manufacture 50 trades using this one strategy and make a ton of money and master one stock. And that's kind of my goal. That's how I've made so much money on Tesla, obviously NVIDIA, some of the other big ones. That was the strategy that we made the money on Disney with. So if GameStop doesn't stay above 13, it's going to come back down to 1190. And if it goes below 1190, then it's heading back to 10. Now, as far as how high it can go, well, it's got a pretty tight range up to $15. $15 is going to be a pretty significant source of resistance, because you can take that same philosophy and apply it here. And again, technical analysis, guys, very simple. Just look for touch points. Draw your line where you can see the maximum amount of touch points to trust in your analysis. And look, every time, bing, rejected, bing, rejected, bing, rejected, bing, rejected. If it's been rejected at 15 10 times in a row, odds are in the favor that it's going to get rejected at 15 again. And vice versa. If it comes down to 13 and bounces, odds are it's going to go back up to 15. So I want you guys to understand this simply. So when you're looking at this chart, if this is a stock you're holding, that's why I asked who's holding this. You know that, okay, so you put these horizontal lines on your chart. Okay, we got one at 15, 13, and 12. We know that if whatever line it crosses, it's going to the next one. So if it stays below 13, it's going to go to 12. If it bounces at 12, it's going to go back up to 13. If it breaks 13, it's going to go back up to 15. So you can draw these on your chart and have a very good understanding of how this stock's going to trade based on which levels it trades through and which it violates. So basically what you want to do is you want to map these on your chart so that you can understand exactly where it's going to go. So looking at today's, I'd say that the 4 hours really struggling here. You want to see that close above 13, and then we might not be in the worst spot where we might hold above 13, go back to 15. If not, then like I said, we're probably going to stick below 13 for a while. And you do have some buyers that came in at close, but earnings weren't spectacular. The thing is, earnings for this up and coming quarter are expected to be good, which means there is a potential to buy a bottom here and hold. This is for those of you that follow me already know this, but this is a strategy I use all the time. You don't trade earnings at the actual earnings. In order to maximize your profit, on an earnings trade, you need to buy that a quarter in advance. So if GameStop's reporting their next earnings in April, you need to be loading the boat now if the trade is bullish, right? If it's short, then obviously you're selling the boat right now. But the whole thing with this is that you never want to be loading up right before earnings. You want to load up the quarter prior to earnings. So that means, if we go back into this, if our expectation is for Q1 of 24 to be positive, we would want to start initiating the buy now while we are bottoming out in price. Because remember, the market will start to trade up in anticipation of those earnings. You want to capture the most gain you possibly can. You want to get paid on the anticipation of those earnings. You guys have all heard it before, right? Buy the rumor, sell the news. I think it's a Warren Buffett thing. That's what that is. Rumor is the next quarter's earnings should be good, post a win for GameStop. So you want to buy the rumor, which means I would load, if we hit 11.98, that's where I'd start loading up, $12. That's a cut point, because you know that if it breaks below 11.90, you can just cut the trade because it's coming down to $9 and change. So you can just take an easy small 5% loss. The trade dies, it's over, it ends, and then if it comes back up and breaks through 11.90, you just buy again and you take that trade to 13 and then 15. So my point is you want to maximize your return for every dollar. For every dollar you put in a trade, you want to be able to get at least 3 out of it. So for every $1 you risk, you should make 3, which is basically 1 to 3, right? Risk to reward. right now, buying here is not 1 to 3 because you got $2 upside and you got $1 downside, right? It's 1 to 2, not good enough for me. If we're buying at 12, we can have like a 10-cent downside. We can have a 2% downside, right? Because look at what it's done at support in the past. Look at this right here. This is what you want to look at. Strong support, explosive move to the upside from that 1190 support. If I'm buying around 12 bucks, I can set that stop loss just below 1180, 1175. That way I'm not going to get burnt to a crisp. And as it potentially explodes off of that level, I'm going to capture all that upside. So then you could move your stop loss up with the trade so that you're never really getting beat to death and you're not losing, 80% of your value, 70. Because remember, if you buy stock at 10, this is important. So listen to this. You buy a stock at 10 bucks. It comes down to $5. I'm going to ask you this. I'd love for you guys to answer some questions. If you buy stock at 10, it comes down to 5. How much do you need that stock to run? You're down 50% at that time. How much does the stock need to run for you to be break even? Let's see. Let's see who's got the answer here. Who's got the sauce? Who's got the answer that we're all looking for? What happened with Andrew Huberman? I see that my boy's doing a stream right now talking about Andrew Huberman scandal. I got to know about that. There we go. 100%. So if you buy stock at 10 and it drops to 5, you're down 50%, right? Which means you need that stock to run 100% just to get back to break even. You don't want to be in that boat, guys. You don't want to be in that boat. You don't want to play that game. Looks like we are seeing a pickup here. So we are getting some buying to push above 13. If we hold above 13, then I would say that there is a little bit of optimism here. I mean, we have effectively erased this kind of earnings run that we saw back in yesterday on the push up from basically the same level, 13 to 18. So take a look at this chart and just tell me, what pattern do you see? Boom, boom. Look at what it does, guys. This is how simple trading is. If you can outline a range, trading is so easy. Boom, 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 boom. So every time it hits the bottom, trade to the top as long as it holds. Every time it hits the top, trade to the bottom as long as it gets rejected. So if it gets rejected here, every time it breaks below it, you take the trade to the downside. Every time it gets support here, you take the trade to the upside. You would have made money 1, 2, 3, 4, 5 times in 2 months. You would have been able to take on, as far as options go, stock was 10, 15%. You're taking 20 to 40% on those options. And you do that 10 times, that's 400% return. So if those options are $100, you turn 100 into 400. Sorry, 500. Trading is simple, guys, if you do it the right way. If you want the breakdown of the template of how we do this range trading thing, that link's at the bottom of the Discord. It's free. Jump in there. We'll shoot you over access to that so you can understand how to build out these ranges. and how to take advantage of like this very predictable price action so that you can make some good money. Trade names that trade in a range, which is surprise, surprise. Every stock finds a range. So don't be surprised. Adjust this camera a little bit so I'm a little higher up. There we go. Now I'm centered. Look at that. Production value. Sorry, my production value was piss poor before this. Now it is exceptional. Look at us. Look at us, guys. Look at us. So let's get back to this chart here because we are looking to hold up. We are looking to hold up. We are looking to hold up here. Kai Radio, what's the margin sale price for what? For GameStop earnings, I have no idea. I know they're running a 20% expense rate, but I didn't see anything that detailed their margins. I can't imagine they're great. I cannot imagine they are great. So what I don't understand is their balance sheet is somewhat healthy. But I don't. So that's what's interesting. So net income was 6.7 million for fiscal year 23 compared to net loss of 313 million for 22. Yeah, I'm not seeing that much otherwise. How the hell is Krispy Kreme up so much? Who the hell even buys Krispy Kreme donuts? I don't even know they had any stores anymore. That is insane to me. Absolute lunacy. So, okay. So, yeah, I mean, look, I went through this on the stream last week. Brokers only make money if you're trading at a high frequency, right? Like they want you executing the maximum amount of trades so that they can capitalize on that revenue through those little margins here and there, right? Because they're taking your order and selling it to somebody else. It's a whole payment for order flow model, that's a crazy thing. I mean, I'm sure everybody knows this, has seen documentaries at this point, but does everybody know that like who's the man behind the payment for order flow method? Who brought that to the light? Who shepherded that in? Who was the purveyor of the payment for order flow methodology? Somebody's got to know who created that and brought it to market. I'll give you a hint. He's currently in prison, or he was in prison. I don't know if he's still in, but oh, he died. 2021. Sad story. Sad story all around. Of course, man. I'm glad you came, brother. Hey, where are you able to comment this stuff? Quick question before you leave Shy Radio, because I'm not seeing other comments, but you're able to post from Twitter. Are you doing it directly on the post, just so I can guide people in the future? Because I can see all your questions, which is awesome. I've never seen them from Twitter before. Yes, Bernie Madoff, dude. Bernie Madoff is the one who shepherded payment for order flow into the market. The guy who embezzled and defrauded so many people. Like, that's the craziest part about this whole thing. That guy. So when they take your order and they sell it to somebody else, they're just squeezing that little bit of margin, but it also gives them a lot of control in that they can pick and choose who they sell to, as I understand it. Now, what the difference is between the bid and the ask and all that, I really couldn't tell you. I mean, we could look at the order book. I'm assuming time and sales coming in 1320. So there is some buy side, but the bid ask is a cent right now. It's lunacy what they can do, middlemen, in creating their markets and manipulating the order flow. I mean, it's standard practice to do so, which is like a shocking thing, in my opinion. And it's kind of unbelievable that we still tolerate it at this point, but there really isn't much control. Like, they've, in improving the access that we have to capital markets, that also comes with the pitfalls of, we don't have any control or any say other than who we decide to process our orders through. But then again, you look at companies like Robinhood that make ease of use so practical and easy to understand and use. The platform works well from a user perspective. What are you going to do? If it's easiest brokerage to understand, to download, it creates access. So like we surrender that control, whereas we can go to other brokers that I would say are a little less mischievous. But at this point, without having the trade commissions, I don't really see how many people are making money. I guess you can go to a brokerage that takes the trade commission, because then they're not selling your order flow. It's how they make their money is on your commissions. And they make a lot more money, but obviously volume doesn't get processed through there. So it looks like GameStop is making an effort. I mean, look, I am very interested in loading up a Q1 earnings trade for the next 3 months, where we will potentially be swinging this for a pretty significant return in anticipation of the next earnings announcement, which should be either good or abysmal. I mean, that's the thing, is when they're expecting net positive revenues for 1 quarter out of the 4, because remember the other 4, they were not expecting net positive revenue. But if they don't beat on that revenue, this thing is going to go down. It's going to be bad. It's going to be real bad. However, should they beat in those earnings announcement which I believe in April, this thing could go crazy for a little bit. But remember, most of the move is going to happen before earnings. That's where I feel like most people mislead newer traders, newer investors, whatever. The earnings moves happen in anticipation of earnings, not often. The biggest moves happen in anticipation of earnings, not after. So you'll see a stock run, 40% in the months preceding the earnings. So if earnings are in April, you'd see it running, the earnings, they'd be in April. You see it running all the way until now, which would mean we'd bottom out and then we'd start to see that move. But I guess it's also important to remember that all the time, the stock market is disjointed from the economy, whereas a company could post great earnings and have an abysmal trade in the market. They're not tethered together as you think they should be, where the inherent value of the stock is always 100% accurately represented. And that was the whole argument with the GameStop or the AMC thing. And I guess GameStop and AMC with the whole missing shares and all that stuff. When they're creating, fake shares to sell short. I mean, they're selling short shares of a company that don't exist, which doesn't make any sense. That's why they were so leveraged and they were paying so much money on those shorts. But it's just madness. So we're going to flip to the 30-minute here, because we do want to see confirmation above 13. If we do, then we might be poised for a little upside, a little bit of a retrace. I mean, I think this was a bit of an overreaction, but I will also tell you this. I think that this run up today was an overreaction in anticipation of earnings. To be honest, this should have traded up to maybe 13, which, think about how different this chart would look right now. If we only traded up to 13 today and then consolidated and then sold off to here for earnings, that's like $1 decrease in share price versus 2, right? So it's only half of the downside. So it's also important to look at stuff like that. So look, because it ran today, because of, I'm assuming, all the buyers getting in the market, getting excited, hyping up, running the price, that's the bad part. Is it probably shouldn't have happened that way. Because if you take the middle of this range, it's traded to about 14, up, down, up, down, up, down. It's just traded around 14. Then it's only down $1 and change rather than being down $2 plus. So yeah, I think there might be a trade boiling here, you guys, if we can consolidate here above 13 in anticipation of the earnings that should be posted in a month, where if they beat, it'll be strong upside, which would be fantastic. I wasn't expecting Bernie either. When I learned that, it blew my mind. Bernie Madoff, you guys, like that's this guy. Ha! That's funny. So he had the whole Ponzi scheme where he would basically just tell people like, no, you know what? I can't get you into my fund. We're just loaded up right now. We're making so much money. So then people want in on it, but then he's not providing any reporting. There's some really good documentaries out on this where he wasn't providing any sort of reporting. He wasn't doing anything else. So if the mortgage crisis hadn't occurred, he might have been able to run this for quite a while because he had just been, their money had been disappearing. So imagine you give somebody $100,000 and then they tell you that the fund is up 50%. So in your head, you're like, I have $150,000 with you. I want to withdraw 50. He starts panicking because he doesn't actually have the money. He spent it or did something with it. Your money's gone. So when you start to make that effort to withdraw, he starts panicking. And because he starts panicking, people get a little more suspicious. And then from there, it just all falls apart. So the mortgage crisis was the key driver for him, and that everyone needed to make withdrawals because they needed cash, but he didn't have any money to give them. So he was ordered to pay restitution. I don't know how much, but I know a lot of people lost a lot of money with that guy. So always ask for receipts. More importantly, learn to manage your own money so that way you don't ever have to worry about it. All right, we're staring at a chart that's not moving all that much. Let's see what else is happening in the market right now. We got what else? Who else is posting earnings? CDXC. It's Chromadex. I'm not seeing really anything here. I think that was the other one that we had on here. Let's see what else moved in the market today. We had mostly decliners. The Dow finished red, NASDAQ red, S&P red. So the S&P trade was easy to see if you guys came to the stream last night. Remember, we set that price alert at 519. Oh, it looks like it hit in, is that an after hours? No, that put would have played end of day. Yep. So remember last night on the stream, we talked, if we broke below 519, we take that 518 put. It came down to about 518.40. So that's beautiful. Picked right back up. So we'll see if we stay in this range or close below it. Who else had a good day? We had a few weird small caps that had a good day. I don't know how in the hell. Krispy Kreme. Dude, who's buying this shit? Oh, McDonald's partnership. Great. Awesome. More ways to die. And garbage food. Whoa, what happened to this Landos Biopharma? Wow. Big day for them. Look at that. They opened at 3x. So they must have had clinical approval on a drug or something. Unbelievable. Look at that. They closed at Monday at 8:05. They opened at $23. Unreal. They must have made some real money today after getting downgraded quite a bit. Let's take a look at Tesla. Looks like Dell insiders are selling a lot. Dell insiders. Non-material. Let's see how coin did today. Good. We're staying strong above 261. Next target will be 323. Should it continue? I am long this one. I was my cost base is about $70 a share, so we're up about 300%. Keep that in mind. That was an easy trade. That was a good trade. That was a tasty trade. Which one was I just going to look up? I thought I just said it. What was it? What was I just going to look at? I just said it, I thought. Oh, Tesla. Boom. Tesla had a pretty good move today. Buyers came in strong, pushed to 184. We came down a little bit, not concerned. Tesla's trading in a range. Look, so again, if you don't trust this range strategy, then I don't know what to tell you. Here's the bottom of our range. Here's the top. We were buying at 160, 162. Look at that. Look what it does. So predictable. So predictable. $20 a share. Get some. Beautiful. Got a pretty big position there. I think this is buying the bottom on Tesla. Let's take a look at how Snow did. It's another strong data and tech name that we're watching. I would love to get this at 145, but I don't know if I'm going to get it. Looks like 157 is trying to, build some support and bottom out here. But this one's on close watch. I really like this one. I think this one's going to be a winner in the long term. I think that it definitely has upside here. I mean, if you look at this chart, it's pretty phenomenal what your upside is. And I mean, anything that's just creating a mountain of data that is selling to big time providers is going to be good stuff. We just want to see either a close above 165 and a hold, or we want to buy off 147, 148. And this will be a long hold aiming for $300 in my opinion. So that's what I'm going to be doing with this one. But I like it on the whole. But yeah, all right. So, yep. So for those of you that didn't know, let's see it Friday, 2 p.m., live day trading plus passive option spread. We are 19 weeks in a row. We have made over $250 of passive options income. So let me do the math there. 19 times 250. So we made $5,000 pretty much over 19 weeks, passive options, one trade with only $500 at risk. So we've been taking 50% returns week over week over week for 19 weeks in a row. Great passive income strategy. It's one trade. You just sell it, you wait, you close it a week later, done and done. That's been phenomenal. Our Robinhood trade, although it didn't have the best day today, we are still, it did actually close green. So remember, we're still seeing 100% upside potential here. We were buying this at $8. We were up about 400% in the options, I think. Let's take a look. Yeah, our options trades are up 467%. These are long strategies just separated by $5 strike. And then obviously these two are leaps. I'm going to hold these for quite a while. They'll be in the money. I'll probably exercise them much like I did the NVIDIA calls. But I'm going to start scaling out of these as we clear through that gap, which we have a good upside here. If Robinhood tries to push this liquidity zone, it should be a nice move to the upside. If you're not in the Discord, join Discord. The link's at the bottom. Check it out. And for those that may have been wondering, that indicator I was using is called Stocks Buddy. I would definitely check it out. It's phenomenal. Gave the buy at 1054. Look at this thing. Look at it on the monthly. Boom. Gave the buy at 872. Stocks up 100%. Automatically calculates your stop loss. That's what that blue line is. Beautiful. Don't know how to draw trend lines? No worry. All you have to do is trace them. Fifth grader could do it. You could trace both these trend lines to understand the resistance and the trend channels. So easy to use. Gives you bull and bear signals, and you can configure it based on beginner, intermediate, advanced. I personally like intermediate. I think it's just clean and easy, and it works. So if you haven't checked that out, I'll just actually post the link because it's stupid. You just need a free TradingView account. So if you just go to that link, you'll be able to click it and get up in there. But yeah, I hope to see you guys in the Discord. So we'll be live trading Friday, so you can get access to those trades, get up in there. I love y'all. Stay blessed now. Bye bye.